Welcome everybody. Thanks for joining the webinar today. Wherever you are, Hong Kong, Singapore, UK. So the next sort of 10 or 15 minutes, I'm going to share a little bit of background to the UK and what's been going on there so far this year, and also sort of reflecting on the election. Okay, so I appreciate there's a number of people on the webinar today who have not heard about IP Global before. So a little bit of background to our business. So I've been in IP Global since 2006. We've transacted around about $3.2 billion of property since we set up. We have a host of global offices here in Hong Kong. We've got 50 staff. We are a research-driven end-to-end property investment company. We effectively underwrite our deals. So very simply what that means is we commit our own capital. Whatever we haven't sold by completion, we have to buy. So we're aligned with our clients' interests. So we genuinely believe in these opportunities, and we built up a great reputation over the years on the basis that whatever the client doesn't buy, we have to pick up by the time a building is built. So a lot of research goes in at the outset to make sure we get into good projects. And on the other side, we assist in the end-to-end buying process. So some of the reasons that can hold back a client from investing is, what do I do about a lawyer? You know, what do I do about mortgaging? What do I do about lettings and management? Well, we manage the whole end-to-end buying process to assist the client in their transaction. So today I'm going to talk about the UK market and what we've seen since the end of the election in December. But before I do that, and I'm going to touch on today Birmingham and Leeds and a little bit on London, where else are we investing this year? So the other markets we're focusing on are Berlin, Leipzig in Germany, Portugal. We're going to talk about Porto and Lisbon in the months ahead, where we see some great opportunities. So UK is going to be a predominant sort of market for us. As I say, Germany and Portugal will also be areas where we're going to focus on, where we see good investment opportunity. Okay, so the UK, you know, the UK for us last year was very slow. We didn't do much business. There was a lot of uncertainty. People were worried about Brexit. They were worried about the political situation. We saw Theresa May's government fall. And by the end of the year, we had the election, and people were wondering what was going to happen. They were concerned about whether Jeremy Corbyn would get elected, and that could potentially impact heavily on property, additional taxes, etc. From the point of view of the Conservatives winning, they were worried about another hung parliament, etc. So in terms of the actual end result, where we saw Boris Johnson win with a convincing majority, that was really the best result that people could have expected from an investment point of view. So Boris Johnson basically his message was, we're going to get rid of Brexit pretty quickly and get that tied up. It was seen as from an investment point of view, the best result that we could possibly expect. So what have we seen since the start of the year? So in effect, with the Conservatives winning, 31st of January, the Brexit vote was passed in the House of Commons. And now Brexit is firmly off the table from a point of view of people's mindset in the UK from day to day. People aren't talking about Brexit anymore. That hurdle has been removed. But obviously, in terms of trade negotiations, etc., there's going to be a whole host of stuff to sort out, and that's going to create an ongoing currency opportunity for our overseas investors as the year progresses. I mean, there's a timeline set out there. I think the feeling is by the end of the year, some sort of simple deal will be progressed. But the fact is, there's a lot of talking to be done, and as I say, that's going to keep the currency probably weak for some period of time. And here is the currency charts right now. I mean, when I think about when I came out to Hong Kong, it was 16 Hong Kong dollars to the pound. Today we're sitting at sort of just over 10.04 Hong Kong dollars to the pound. We're looking at a Sing dollar that's about 1.79, whereas when I lived in Singapore, it was about 2.3 Sing dollars to the pound. So basically, there is a strong buying opportunity for the UK property market, amongst the fact that there is strong confidence on the ground in the UK. So I was back in the UK in January, and I went to London, and I spoke to a number of agents, and clearly there is a pickup in the market there. There was a pickup in inquiries. People are not concerned about the Brexit side anymore. Last year, as I say, there was a number of obstacles, political and Brexit, that was putting them off making decisions. This start of this year, that's been swept from people's minds. So there's actually a lot of pent-up interest for people to invest in the UK. So from our perspective, we're going to be focusing on re-engaging with opportunities in London and also into the regional cities as well. So these are some of the headlines that we've seen. This was in The Guardian recently, just talking about the fact that Brexit post-instability has reflected of increased numbers of people looking at the housing market, the fact that these hurdles have now been removed, and the headlines are in all the sort of national papers, various media, etc. And people are seeing this, and they are definitely engaged now in terms of property investing in London and also across the regional cities as well. So what's going on in London, and what's the sort of plan over the next couple of years? Well, finally, after a number of sort of hurdles have been overcome, the Crossrail opportunity is coming. So the Crossrail line will be built in 15 months. It's been a little bit delayed, but that said, so many major infrastructure projects. If you look at what's gone on here in Hong Kong and Berlin International Airport, these big projects do take time, and this is the largest one in Europe that's been built. So right away across London, we're on the cusp of a number of huge, exciting regeneration projects that are across this Crossrail train line, which goes from east to west across London. It goes from Shenfield in the east, way past Heathrow on the west, and it's massively reducing journey time. So people are going to be able to commute into London quicker. Around each of the 40 stations, there is high-level regeneration that's gone on, and it's really going to lift the infrastructure in London to world-class status, and also tying in this sort of post-Brexit world. So London is going to be a market we're going to be focusing on very strongly. In terms of the regional cities, the likes of Leeds, Manchester, Birmingham, Liverpool are all cities that we are going to focus on this year. Leeds is basically a city that we've worked in before, and is synonymous for the fact that it's a really good opportunity that we see to invest in. So the big plus factor for the UK market this year has been the recent announcement by Boris Johnson that the HS2, the fast train link, is finally going to go ahead. In terms of the situation for HS2, it was started, it was stalled. There's been a lot of money invested, and there was a sense that it may not go ahead. But finally, a couple of weeks ago, Boris Johnson decided, yes, I'm going to push ahead with this deal. And what this basically means is it's not just a fast train link into the regional cities. It's basically a driver for so many other high-level infrastructure projects that are going to go on across the UK. So it's going to drive a lot more headcount to the regional cities. It's going to drive new headcount. And in cities like Leeds, there is a lot of high-level planning that there's been waiting for confirmation of the high-speed rail link that's going to be implemented. So when it's built, it's going to make the UK a lot easier from a connectivity point of view, a lot more integrated. So, have a look at some of these journey times. They're huge reductions. You're going to get to London in just over an hour and 21 minutes. That's from sort of 2 hours, 11 minutes already. So Birmingham is going to be the epicenter for HS2. Again, very, very quick journey times, and it's going to link the cities of London, Liverpool, Birmingham, Manchester, Leeds, and beyond in a very, very strong and integrated way. So in terms of what Leeds has got to offer, it's a big, big student hub, 42,000 students in Leeds. It's always been a very big legal hub. So when I speak to a lot of my clients in Hong Kong, they started off in Leeds. There's a lot of wealth on the cusp of Leeds. There's a lot of sort of digital media companies. A number of corporates have moved their head offices there. So the likes of Vodafone and a number of others. And it's a big, big financial services hub. So, you know, as I mentioned, we've seen very strong interest in the UK already this year. And just to prove that fact, we launched our project, the Preston in Leeds, literally just over a week ago. And we've sold all 57 units in that week. Now, last year, we didn't sell 57 units in 6 months in the UK. So this clearly shows the sea change in sentiment. And this is a classic example that we'll bring this year of projects. So basically 1-bedroom units, around about £100,000 with a 6% yield. So clients who are looking for yield, regional cities definitely offer that. This is on the outskirts of Leeds. So basically about sort of 15 minutes from the city centre. Here on this slide, you've seen highlighted the HS2 terminus, Leeds Beckett University, where there's a couple of campuses in Leeds, and also in this immediate area. Now, what do we look for? We're looking for local transport, big employees, so you've got ITV studios nearby. We're looking at regeneration, so there's a couple of big regeneration projects going on around this building. And when you're buying a 1-bedroom unit for about £250 per square foot, so close to the city centre, we think this is really excellent value. And that's obviously been recognised by clients who are focused on these value-driven opportunities in the regional cities. Okay, just slight technical issue there. So let's flick across to Birmingham. So actually, I was in Birmingham last summer. I hadn't been there for quite a number of years, and I have to say, I had quite a sort of a distorted image of Birmingham, shall we say, until the point when I went there. It was always a bit sort of dour, very tired, very sort of dreary, and so on. But having been there in August, clearly you can see some incredible investment that's going on right now. So new bars, new restaurants, shopping malls, the old Bullring that was really a sort of a relic from the 70s has been wonderfully brought up to the modern era. The Mailbox, another shopping area, the Custard Factory, which is an up-and-coming tech location, and also the Smithfield regeneration area, which is right in the centre of the city, where the likes of Deutsche Bank, HSBC, etc., are currently building new offices. And I stayed in the centre of the city, and I just thought, wow, this place is going to change beyond belief over the next few years, and is changing hugely already. You know, when we're talking about a city that is now got the boost of the HS2 fast train link, and that'll be 40-odd minutes to London, you know, it's really a city that's going places. So let's have a look at some of these journey time reductions. So from London, actually, you're going to get to London in about 40 minutes. You're going to get to up to Leeds from Birmingham in about 81 minutes. So geographically, with Birmingham in the centre of the country, it's well placed to connect to cities in the north and obviously London in the south. The airport's undergoing a lot of investment, and you know, Birmingham and Manchester sort of vie for sort of second city status in the UK. Birmingham is the biggest by population. It's the closest to London, and therefore it has a certain advantage from a geographical point of view to capture jobs as they move out of London because of the better infrastructure in the north. And from a property perspective, you know, typically we're looking at people who are moving out of London who perhaps are on sort of 2/3 of London salaries, but actually property prices in Birmingham are about 1/3 of London. So there's very, very good affordability that we see there. So here's a snapshot of what's going on in Birmingham. So it's got more canals than Venice. I didn't realise that. It's got more Michelin star restaurants outside of London than anywhere else in the UK. And so there's a lot of social attractions there that make it an attractive place now for people to live and work. And as I say, there's lots and lots of big corporates that are moving there, increasing headcount, and the connectivity from Birmingham Airport. Basically, you can get sort of every which way right the way across the globe now. So here's an idea of our recent launch, the Bishton Fletcher building. This is a really nice sort of niche boutique building in the north side of Birmingham. It's the jewellery quarter. So this is where 40% of the UK's jewellery has been produced. It's a really nice location of listed buildings, buildings that are just a couple of floors high, old sort of conversions of buildings used in the jewellery industry. Over the years, the government has given a lot of grants to keep these buildings to their original heritage, and now it's really flourishing as an area where young people want to move into. There's nice new bars and restaurants springing up, and it's literally about sort of 10 minutes to the centre of the city. So a really nice location for people actually who want to live here. So let's have a look at what's going on in this area. So the Bishton Fletcher building, so literally just on the north side of Birmingham, it's got its own station. It's got lots of local amenities. There's a number of big employers such as Deloitte's that are in the area. There's a number of big university campuses as well. And it's about sort of 10 minutes to get into the centre of city from sort of Birmingham New Street Station. Birmingham New Street Station is the biggest station outside of London. And very much it's undergone a lot of modernisation recently. I had a meal actually in there. There's lots of nice new bars and restaurants. And on your map there, you'll see the Smithfield regeneration area. And this is a big regeneration area right in the centre of Birmingham. There's lots and lots of big corporates that are moving in.